Yes. So, international shipping income exclusion. So, it is a part of chapter 3, which is calculating globe income. So, whenever you are calculating globe income, and if any constituent entity in the group has shipping income, its major activities include shipping, then this should be, triggering you that yes, they would have additional adjustments and exclusions as well. Okay. So let's make it very interactive. So just keep on interacting in the chat so that I would know if there is any disturbances technically, or if there is any point that you didn't understand. Okay. So you can even do a show of hands because I can see every one of you. So you can also do a show of hands to kind of like, let me know if there is anything. So the objective is, after completing this chapter, you would be able to identify qualifying international shipping income, apply ancillary income cap, and exclude eligible shipping income from globe calculations while meeting substance requirements. So don't go by these words. You would kind of get it once we complete this lesson. Okay. So you tell me shipping. In UAE corporate tax also there is a shipping exclusion. Yes or no? But is it across all kinds of shipping, or is it only for certain types of shipping? We have a shipping exclusion, and if I'm not wrong, it is Article 25. It's completely exempt from tax. It's not a relief or an option, it is completely exempt from tax. So, same logic here. But you answer me if it's applicable across all types of shipping, or it's only for certain types of shipping. Yeah, I don't see any chats. So Sahil says it's for international transports. Yes. So same logic here. This is only for international shipping. Okay. So international shipping meaning like you are taking goods or passengers from one country to another country, instead of like going just inside. So why do you think that shipping income is always exempt in terms of all kinds of taxes? May it be corporate tax, may it be international tax. We have an article 8 on international shipping, and of course article 3.4 here in pillar 2 on international shipping. Why is international shipping kind of given a lot of leeway? 1, 2, 3, 4 points. Why do you think international shipping is given a complete leeway? Yes. Okay. Sahil says a lot of tax compliance due to many international jurisdictions. Yes, Sahil, I understand if it is corporate tax, but this is, just one tax, right? I mean, as a group, you have to only pay, once. Whatever is more than 15% is kind of paid. Definitely, your UPE will pay. It applies only at three frameworks: on your level, one on UP level, and one on other entity level. And the UTPR, it just goes only if there is any excess taxes. So why do you think that this is exempt? It's not, definitely not due to compliance. Any other points? Okay, so let's come back to drawing board. So basically, why do you think shipping is given a complete leeway, or like shipping companies are kind of a big deal? Yeah. So it is because one thing is, shipping is something sensitive. So all the oil, all the food, and all the kind of essential commodities we kind of consume on a daily basis, it's a byproduct of shipping, right? Now if anybody is imposing an additional tax on it, that means that they are grossing up the taxes on other things as well. Yes or no? Say for example, oil. Most of the oils is brought by tankers. Or either way, oil is a premium commodity. It is expensive, and on top of that, now pillar two is also cascaded onto that is something very 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 severe. So that is one thing. Like the nature of industry is one thing. Second thing is like who owns yeah, there are a lot of private players, Maersk and all those guys, but who do you think owns major shipping companies? Mostly by governments, or government has a lot of invest interest in shipping industry. Not just any government, not the Indian government, but let's say that Sweden, Denmark, or Norway, if you go, most of they have their own shipping companies. So like it would technically be like taking more tax from their own company. Okay, so there is a lot of government interest which is vested, and if any tax is imposed on these companies, it would create a charge on us as well. Now, it is not that they are not paying any taxes. Obviously, there are like other taxes which they have to pay, and one of the important tax that they pay is what is we call as tonnage tax. So, based on the amount of tonnage that you're carrying, you have to pay taxes. So already they are subjected to it. Now, if you are kind of like putting something else, then that becomes an extra burden. So this could be the reason why shipping companies are kind of like take a back. But you have to understand what are shipping. It's not that they only kind of transport goods and passengers. They do a lot of other things as well, right? So it's important that through this this kind of like chapter, you have to understand what are the qualifying activities which would be called as shipping. Okay, so you can bring all your free zone considerations here. There is something called a qualifying activity. Only those activities will be called as shipping activities. Then there are like ancillary activities. That's also defined what is and what is not. It's not like free zones here that anything ancillary is the here ancillary is also defined. And also like there are like non-qualifying activities is basically like anything which does not fall. So and also like you have to also understand that there are substance requirements. So you could match and understand like okay, you say you are doing shipping, but what if I don't meet the substance requirements? I will not give you. So all that is being defined. I understand the need. Based on all this, I would give you a leeway, but I will only give it to if I'll only give it if you do qualifying activities or ancillary activities and you meet the substance requirement. So you, if you want to learn this better, you kind of go into the free zone mentality. Okay, so we will take that all. Is it clear why shipping is quite important? Because it's the lifeline. It's the arteries which carry the economy. So it's given a preference. We don't want any unwanted price rise there due to a tax, right? And obviously to check that nobody is exploiting it, they have given all these things. Okay, so it goes to only the eligible candidate and not to anybody who's pretending to be a shipping company and getting away from pillar. Is this a clear? Okay. So international shipping, now we will read the theory. International shipping exclusion represents one of the significant carve-outs from global minimum tax framework. Its inclusion in Article 3.3 reflects decades of international consensus that shipping, an inherently mobile, capital intensive industry essential to global trade, requires special tax treatment to remain commercially viable. Okay, otherwise nobody will come into the shipping framework if you have tons of taxes to pay everywhere. So nearly every major maritime nation operates, see, every major maritime nation operates some form of tonnage tax or preferential shipping regime, and subjecting these regimes to additional 15% would have effectively dismantled them overnight. Okay, the exclusion preserves the status quo while carefully defining boundaries also to prevent abuse and ensure the benefit flows only to genuine shipping operations. Is this clear? This theory? Yes, you know why it is? Because it's important. And so they have given all the guardrails so that it does not go into any other imposter who's masquerading to be a shipping. Now, why shipping gets treatment? The international shipping industry has a unique characteristics. Okay, what are the characteristics? They are highly capital intensive. Of course, they have to buy a lot of things. They have long economic cycles. They have volatile earnings. You could see that today. They have very volatile earnings. And if you see, one of the major thing is insurance, right? Because insurance is, a part and parcel of this industry, and insurance they have to pay a lot. And right now, since this disturbance has happened, the insurance has skyrocketed. And as a matter of fact, insurers have come out and said that we will not insure you at all, even if you paid all the premium, if you are in Strait of Hormuz. So that's the kind of pressure they are in, and they absolutely have volatile earnings. Charter rates fluctuate significantly, and there is global mobility as well. Like if you change the flag of the ship, you can actually become the resident of another state. So because all these reasons, like they get a special treatment. Now, many countries operate tonnage tax regimes that tax shipping vessel based on tonnage rather than actual profits. These regimes typically result in effective tax rate of 1 to 2% only, well below 15% global. Without an exclusion, shipping companies would face top-up tax on virtually all profits, undermining policy rationale behind tonnage tax regimes. Okay, and you see countries like Greece, Denmark, Norway, and Singapore have built substantial maritime clusters around favorable shipping regimes. Dismantling these through Pillar 2 would have redistributed not just tax revenue but economic activity as well. So they don't want to kind of like, tax. Okay, now let's get to the basics. So I told you that there are something called qualifying activities, ancillary activities, and substance requirements. So that it's not abused. Now, what are qualifying activities, or basically what income gets excluded? Now you have to think in line of your total income, your net profit, and out of which, if you have some qualifying activities, that gets removed. So what are those qualifying activities? So M&E groups with international shipping income. So international shipping income is excluded from global. Okay. Now, qualified ancillary international shipping income is excluded from group income up to 50% cap. We'll talk about all these caps, don't worry. But you have to say that if your activity is what is an international shipping income, then it is fully excluded from globe income. If it's qualified ancillary shipping income, then also it's excluded but subject to limits. And also, if you have international shipping losses, that would also be excluded. If profits are excluded, obviously, if you get losses, that would also be taken away from your total profit. Yes. Okay. Now, what see, key point is both income and losses are excluded. The exclusion is symmetric. Now, basically, what is international shipping income? So let's see what are the qualifying activities. What exactly are international shipping income? So international shipping income means the net income. Okay, it's not the gross income. So when you are excluding these things from your P&L or from your globe income, you have to take out the income as well as the expenses. It should never be like you take out the income because it's excluded and keep the expenses there. No, you have to take out the net income. Okay, so that means you have to apportion all these. This is how standard things go. So what is qualifying activity? Direct transport. So transportation of passengers or cargo by ships in international traffic. Okay, it does not matter if the ship is owned, leased, or otherwise at disposal. But if you are doing an activity of transporting passengers or cargo by ships, then it is a qualifying activity for exclusion. Yes. Now slot chartering. Now what is slot chartering? It's good to learn these terms So that you know what is slot chartering. So slot chartering means, I understood that you guys are doing KP, so you should know. Okay, so what is slot chartering? Is let's say that you don't have a ship, or you are a shipping company, and you have around three ships. Okay, and it is going from UAE. One ship is going from UAE to Canada and back. Okay, another is going from UAE to India and back, and another is going to UAE to South Africa and back. Okay, let's say that these are the three ships. Now, one of your customers comes and says that, boss, I kind of like, let's say that your UAE Canada, ship is full. Okay, so but he comes and says, no, no, I need to transport. It has to go today. It has to go in the same thing. But you are saying it's full. So what you're doing is you are effectively what you're doing is you're taking money from the customer, and you see that in your network there is an other ship which is going. Okay, there is an other ship which is going, which has around 20 slots remaining. So you effectively be the middleman. You book that, the remaining of that ship, and you effectively get your money from your customer. This is called slot chartering. So you are slaughtering a charter of another ship. Are you getting it? It's just like booking. Let's say that there are 20 seats that is vacant. You have each slot. So take into example of an aircraft. So let's say there are 20 seats left, and I have to take 19 passengers extra. I will book those 19 seats in another aircraft and give it to them. Yeah, this is called slot chartering. It is not directly, I'm not shipping their passengers, but rather it's kind of an indirect thing. Is it okay? Getting it? So you, while slot chartering, transportation under slot chartering arrangement, but just think of like you booking an aircraft flights, or seats in an aircraft, or like you're booking slots of an alternative. Now time charter out. What does it mean, time charter? What is time charter? Time charter is just like what we call as a wet lease. So for a particular amount of time. So for let's say that I have a ship. I have I have like 10 ships, and one ship I'm giving it to somebody else, along with the crew, along with it's a fully functioning thing. So so we basically are renting a ship out, fully equipped with crew and supplies. Okay, so the tenant or the person who leases it would determine where the ship will go, what it will do, but the entire ship is mine. It's just like you giving your house on rent. Yeah, including all the supplies and crew and staff and all these things. This is called time charter. It's sometimes called wet lease in different prerogative. Yes, time charter. Now bareboat charter to a constituent entity. Now bareboat charter. What is bareboat charter? It's just like time charter, but here only that we'll only give the ship, not the crew or supplies or anything. Okay. So in a bareboat charter is a qualifying activity only if it is given to another constituent entity. Okay, this is one clear difference between others. If I'm giving it on a bareboat charter, then it should be a constituent entity. Otherwise, it's not kind of like it's not excluded. If I give bareboat charter to somebody else, no, it's not a qualifying activity. Okay, now pools, joint ventures. So instead of like let's say that I have three ships, somebody else has two ships, he has five ships. There is a lot of demand, so we pool, mix and match, and we kind of like give. This is just like joint operations. In joint operations, what happens in IFRS? Joint operation is not a separate entity. Rather, the profits from the joint operation is accounted in whoever is the contributor. You understand? So in same way, if there is a joint venture and my P&L has income and expenses relating to a joint shipping venture I have, then those would be excluded. Yes. Yes or no? Okay. And also, sale of ships is also a qualifying activity. Now, sale of ships doesn't mean that it is inventory. So, if I am a seller of ships, I'm a shipbuilder and selling. That's not excluded. But rather, if I own a ship and I'm selling it after holding it for 1 year, then it is a sale of ships. So, to long story short, if it is a capital gain, yes. Or if it is sale of PPE inventory IAS 16, sorry, PPE IAS 16, yes, but if it's sale of inventory, IA is 2, no. Okay. So these are the qualifying activities. Whether you do direct transport, if you do slot chartering, if you have income of slot chartering, if you have income from time chartering, bareboat charter only to a constituent entity, pools or joint ventures. So joint income, joint arrangement. So joint income being recognized in your P&L. Yes, that's kind of that's also disallowed if it is from if the joint operation is into international shipping and or doing any other of these activities, and sale of ships as well, provided it's a capital gain and only if it is held for at least 1 year. Okay, if I buy and then sell also, I'll not get. I have to hold it for at least 1 year. Is this clear? What are qualifying activities? Any doubts? Any doubts? Okay, thank you, Mel. So okay, so those are the qualifying activities. There are only five activities. Okay, one, two, three, four, five, six. Sorry, six activities. Now, what does not qualify? So you know the qualifying activity. So if I am into shipping, what does not qualify? If I am, this is definitely not going to qualify. Okay, so inland waterways, obviously, because if I am transporting through inland waterways, now there is a new, inland waterways which is coming in Kerala, where goods could be kind of like transported from Trivandrum to Kasargod via the waterways instead of the roads. That's one plan. I mean, we don't know whether it would be executed or not. So those kind of inland waterways is not international shipping income because it is not international. Okay, domestic coastal shipping, yes, definitely not. So it's only in one jurisdiction, right? Towing and dredging. Now, what is towing and dredging? What is towing and dredging? Does anybody know? These two were like these two words were kind of giving a lot, was there in a lot of news, especially when the Vizhinjam ports were announced. What is towing and dredging? No, it is not oil extraction, Sahil. It's not relating to oil. Why would it come in Vizhinjam then? Then when there is practically no oil there. So towing means like you see these big ships, right? So they are designed to kind of be in very deep waters. Okay, they cannot ply on shallow waters. They can only be on deep waters. That is why the ship is either docked somewhere else, and there are feeder ships which go and collect things and come to us. They cannot kind of like that's why the concept of uranium was very attractive because it is quite deep. Okay, its base is quite deep, so big ships can come and dock. If it is shallow, the ships cannot. So what would happen is if there is a big ship, there would be to kind of like if the bottom is a little shallow, what it does is there are ships which kind of go there, connected to it, and it will drag it here. Just like how you tow a car and go from here. You know how if your car gets punctured, you call for towing activity, right? Where they come and tow and take it inside their like truck and then kind of like comes where it was. Same way, ships cannot go when the water is shallow. So they would have to be towed. Some other ship will come or multiple ships will come. They will connect it to the mothership and they will like drag it here. That is called towing. And dredging is more, it's basically like, for shipping, but there is no ships involved here. So whenever a port is shallow or a place is shallow, if big ships can't come, they will dig inside the seabed to make it even more deeper. That's called dredging. Okay, if you dig a land, it's called digging. But if you do the same thing inside the ocean, it's called dredging. Okay, you understand what is towing and dredging? So towing and dredging are explicitly excluded. Okay, but I told you, offshore support vessels. So let's say that it's shallow. I can't come here. It's docked somewhere else. So I send feeder vessels to go and collect people and goods from somewhere else to here. Those offshore support vessels transporting passengers or cargo can qualify, but only if they are kind of bringing it from international traffic. So if the ship is docked in your territorial waters and the feeder vessels goes and brings it back, no man, that's not international shipping income. But if it's docked in some island where, like, let's say that in Indian example, it's docked in Sri Lanka, and we are sending feeder vessels to bring it, that's what we were doing all this while, because India did not have a port, so big ships can't come and dock. So all those ships were going to Hambantota, where we send feeder vessels to bring our goods and goods and people here. So if feeder vessels are going above the international traffic or international territorial waters, then okay, it's excluded, whatever income they get. But if not, it's not. Is this clear? Towing, dredging, and international feeder vessels or offshore support vessels. Okay. Fourth one is aircraft operations. In no way you should assume that this all applies for an aircraft. No, it is only for ships. 3.3 is only for ships. Aircraft is not kind of in the provision here. Is it clear what does not qualify? Yes or no? I don't see any responses from anybody. It's kind of like, very discouraging. Except for that matter, except Melvin, I don't see any responses from anybody. International shipping through inland waterways does not qualify. See, it depends. If it is, you are carrying passengers and goods through international traffic, then it's fine. So, for example, I'll tell you. So, what Melvin's doubt is, international shipping through inland waterways does not qualify. See, there are two limbs to it, Melvin. So, this is his question. So let's take some example here. So let's say that my ship is going to from India and it is going to UAE, or sorry, if it is going to Jabal Ali, and then it is going to Fujairah. Let's say hypothetical example. Okay. So Melvin is asking whether this leg is okay. Then is this your doubt? If I'm doing it right. So your doubt is basically like, if let's say that I'm an Indian shipping company, I am taking goods to UAE. Okay. But my ships makes these stops. It first goes to Jebel Ali and then from Jebel Ali it goes to Fujairah as well. So in such a scenario, you want to ask if, like, let's say that if I have good, I kind of on like, loaded some more goods at Jebel Ali to take it to Fujairah, whether it would be qualifying or not. Is this your doubt? Look like that example, India and Bangladesh transfer goods through inland waterways rather than ocean. No, inland waterways, if it is for a different jurisdiction, definitely it will apply. Okay, the only thing is whether you have to see whether those inland waterways are belonging to India or Bangladesh. If the whole transport is through inland waterways which belongs to Indian territory, then it is not international shipping, my dear. Okay, so the arrangement might be like this sometimes. So what happens is, let's say I am taking my goods from Orissa to Calcutta through inland waterways, and Bangladesh will come to Calcutta and take it. In such a case, it is not a international shipping. Okay, but if I take from these inland water, if I kind of take it to some place where there is it's under that part of the river is under Bangladesh's control, then maybe. Okay. So it depends on, like, whether we are crossing international boundaries or not. Okay. Now that is qualifying activity. Now what is qualified ancillary shipping income? So this is main qualifying activity. What is ancillary activities? Ancillary activities are also qualifying, but not a qualifying activity is an ancillary activity. And you know that there are some caps involved here. So first thing is bareboat charter to non-CEs. So in the bareboat charter to CE constituent entity is a qualifying activity. But if you give bareboat, if you earn income from bareboat charter to non-CEs, then it is only an ancillary shipping, not a full qualifying international shipping. Okay. Same way, if you do ticket sales, selling tickets issued by other shipping enterprises for the domestic leg of international. So if you are selling tickets, if you are doing container services, now what is container services? Let's say that you have some goods, and we are kind of like, storing it for you. So whether I lease my container to you, or I store your goods on a short term basis, or there is detention charges for late return. So there are demurrage charges, right? If you don't take your goods on time, then there will be demurrage charges as well. Those are all shipping only, but there's an ancillary shipping. Okay, they are not full international shipping. Personal services. So let's say that I send my engineers, maintenance, or cargo handlers to another ship to get those, or catering to another international ship, or customer services. So if I do all those personnel services, that's all ancillary shipping. Okay. And investment income, obviously I need working capital to run this. So if investment made as an integral part of shipping business, then whatever short term interest income or that I receive from as a part of my working capital, let's say that I put all these money in a bank and I get some minor interest, all those would be ancillary and will not be considered as a direct. Is it clear what is ancillary? So ancillary are those performed primarily in connection with international shipping. So what are the services which are performed primarily? Bareboat charter to non-CEs. It's an ancillary income. Ticket sales, container services, personnel services, and investment income related to shipping business. Is it clear? Ancillary. Yes or no? Thank you again. So this is ancillary. Okay. Now, what does not qualify as ancillary? If it is inland transportation, okay, expressly excluded to prevent competitive distortion with land logistics provider. So, if that is inland transportation, port operation. So, if you are kind of doing managing the port, it is not international shipping income, or it is not ancillary to international shipping income also. Port operations are different. Okay, shipyard or repair of ships, no, it is not ancillary. Okay, so whether manufacturing or service relating to ships is not going to be an ancillary income. And freight forwarding. So if you are forwarding the freight on a land-based scenario. So let's take this example. Okay, I am taking my goods from India to Jabal Ali, and from Jabal Ali, there are certain customers who wants to deliver goods to Fujairah also. So that they are taking on a land basis. Okay, I'm taking from India to Jabal Ali on ship. From Jabal Ali, it's going by land to Fujairah. Then that land leg that is earned by the local transporters is not a shipping. Okay, freight forwarding land based. Is it clear? So you have to kind of like understand what activities qualify as international shipping income, what do not, what qualifies ancillary, what do not. No, these are specifically provided in the commentary. That's why. What if a company does a mix of qualifying and non-qualifying? So only for qualifying you will get an exclusion. Non-qualifying would be applicable as globe income. Okay, we'll do examples. No worry. Okay. Now, the 50% cap. I told you for ancillary, there is a cap. So, what is that cap? The cap says that the qualified ancillary shipping income cannot exceed 50% of international shipping income for all constituent entities in a jurisdiction. So, what it basically means is, if you have, only a little bit of shipping income, but a lot of ancillary can only be, the ancillary exclusion is capped at 50% of your international shipping. Okay, so maximum exclusion allowed for these ancillary activities would only be 50% of your ISI, which is international shipping. Okay, so whatever is excess would be included in it. So we will do a little. So let's say that I am a maritime constituent entity. So I do shipping business. Okay, and I'm located in Singapore. So international shipping income is 70 million. Qualified ancillary income is 40 million. Non-shipping income is 15 million. This would answer your question, Sahil. So I have a mix of all three. Now, what would be my globe income? You calculate and tell me. My total income is 70 plus 40, 110 plus 15, 125. So total income is 125. So what is my globe income? This 125 is what is available in my P&L account. Now, what is globe income? Just now says 110 million. How's 110 million? Okay. Can you tell me how you got 110 million as your globe income? Nobody else? Sahil is saying 35 million. Okay. Okay. Ashik says 20. Melvin says 20. It is actually 20 million. Now, how did I get it? Total income is 125, out of which international shipping income is fully excluded. Right. So 125 minus 70 is 55. Correct? Out of which I have ancillary income. Ancillary income, I told you, would only be excluded up to 50% of your international shipping income. Total international shipping income is 70 million. 50% of that is 35 million. But your ancillary income is more than that. So that 5 million gets added. So either 15 plus 5 or 125 minus 70 minus 35. Your globe income would be 20 million. Did you understand the calculation? 15 and capped off ancillary. Yes, absolutely. You can do like that, or you can do full 125 minus 70 minus 35. Either way, the answer is going to be 20 million. Is it clear? The 50% cap rule? Fantastic. So it is an anti-avoidance mechanism. Okay, I'll do some small shipping activity and the rest of the things I'll do my ancillary, then I'll get a whole exception. That's not really right. So to avoid that, we have this anti-abuse mechanism. Now, treatment of losses, we know if I have a loss, if the international shipping income or qualified ancillary income results in a loss, that loss is excluded from goal calculation. No limits or nothing, fully excluded. Okay, that loss will not be taken. I understand that income of qualified ancillary income is only 50%, but no. If it is a loss, fully accept. No carry forward, no nothing. Okay. So why? Because without loss exclusion, the profitable shipping income. So it's just symmetrical, right? If you're taking income as exclusion, the loss also excluded. Okay. So this is going to be the treatment of loss. One thing you have to understand is qualified ancillary income is capped at 50% of your international transport. So you can't use such cap when it is a loss. When it is for loss, it is excluded fully. Okay, just get this in mind. So that's the treatment of losses. And also, we have known that there are some qualifying activities related to international shipping, then there are ancillary to shipping, and then there is, loss as well. But another important criteria, so we will come back to this one. We know what is qualifying activity, ancillary activity. Then there are some substance requirement also. Just because you are having a paper company here in UAE and who's getting all the income, shipping income recorded, does not take you. You have to also demonstrate substance. So what are the substance requirements? So this is from the guide. It says the strategic or commercial management of all ships concerned is effectively carried out from the jurisdiction where the constituent entity is located. So you have to take all the strategic and commercial management from where the constituent entity is located. So basically what it says is, so strategic and commercial management, okay, that's the word. So how to kind of demonstrate it? So major capital expenditure decisions like approving vessel purchase or sale should be done in CE. Asset disposal decisions, awarding major contracts, strategic alliances, flag state responsibilities, commercial voyage planning. All these should be done from the constituent entity, and there should be proof that all these decisions and actions are taken from the sea, from the location of the sea. Otherwise, you will not get this exclusion. Now how do I kind of like demonstrate it? So these things are not sufficient. So if I have only a brass plate company, if I do only administrative function, so basically my directors and managers are somewhere else, and here I only have the load of employees who are just working on their instructions. That's not kind of working. So if you only have invoicing, accounting without decision making, that is not going to work. So it do and if you only have the vessel registration in UAE, that won't work. And if you only do shareholder or board meetings, that won't work. So, welcome to Pillar 2 substance requirements. It's really broad. You can't just navigate around like what you learn, but the theory remains the same. What is substance here and there? And the substance has to be proven for what? Strategic and commercial management is conducted from here. Okay. So, how do you prove that? You have to have board meeting minutes, employment records that key management personnel located in jurisdiction, contracts signed, major agreements should be executed locally, operational reports are prepared and reviewed locally. So you should have operational reports with the sign off, live sign off, not a digital sign off, so that you can prove that they were here, they were looking at all these things. Correspondence, day-to-day management function should be from UAE. So all these are key documentation evidence that you could use to prove that your strategic management was within UAE, or like the country where the the constituent entity which is claiming the solution is. Is this clear? Strategic management, strategic and commercial management is important to claim this exclusion. So one of the working papers if you should have is all this. Now, yeah, interaction with, I told you there is tonnage tax, right? Now, the another problem here is like, tonnage taxes are, applicable for international shipping, which we are excluding as well, right? But domestic coastal shipping also has tonnage tax, which is not excluded. Any income from that is not excluded. So, domestic coastal shipping persons would have to bear tonnage tax as well as no income. Towage and dredging is also coming under tonnage tax. That's not covered here. Offshore support vessels may not be covered, and cable laying vessels also may not be covered. These all have tonnage tax implications as well. So there's going to be a cascading. It's not going to be completely removing the tonnage tax, but for international shipping and qualifying activities, yes. Okay, so this is one risk that shipping companies are there. Let's do one example so that you will understand how it is done. So AR Group is a large MNE, has acquired a Dutch maritime logistics subgroup. Okay, it's called AQ Maritime Holdings BV. The subgroup consists of three distinct operating entities in the Netherlands. Based on the following financial and operational data, determine the total excluded shipping income for Netherlands jurisdiction and the final globe income subjected to ETR testing. The total adjusted cover taxes is 2.7 million. Okay, so let's do this question. together, so that now while computing the shipping exclusion, you have to understand that you have to take the whole constituent entity as one. Sorry, the whole jurisdiction as one. If you have three entities in the constituent, sorry, three constituent entities in the jurisdiction, then you have to consider it as one and not, you have to consider one and not three for this purpose. Okay, right. So let's do this. Let's do this. So let's start Excel sheet. So what would be the first step that you will do? If you get, like, I have three entities in a jurisdiction and now I have to calculate its shipping income exclusion. What is the first thing that you will do? What is step one? Step one, my dears, would definitely be classification of income, right? So what kind of incomes are there? There is qualifying income, there is ancillary income, and then there is non-qualifying. Correct? So let's first categorize each into each. Okay. So what is the first company? AQ International, AQ Shipping International BV. Right? This is the first company. What is their income? Charter income international. What is this? What is charter income? Charter income, they have earned 45 million. What is going to be this? Charter income, they say that it's qualifying. Absolutely, it is qualifying. The charter means direct transportation. Okay. So it is going to be 45 million. Fantastic. Slot charter revenue, they have earned of 8 million. So slot charter revenue. What is this? Slot charter is also qualifying. You know what is slot charter, right? So I'm just charting using another ship. So it is also my qualifying income. Container detention charges. Container detention charges. What is container detention charge? Hmm? No, it's not a non-qualifying income, my dears. It is actually an ancillary. Yeah, it's an ancillary one. Okay. So it is ancillary. So let's look at the question. So container detention charges is ancillary to shipping. It's not a completely gone case. Okay. So it is ancillary income of what? 3.5 million. Then investment income, working capital. What is this? And they say that it's working capital. So it will be relating to, it is also, it is not qualifying income. Investment income, how can it be the international shipping income? It's an ancillary income, right? It is relating to shipping only. Investment, since they are saying I invested my working capital and earned an interest of 1.2. So it's only going to be, so 1.2 is going to be ancillary income. Okay. Now let's look at AQ Coastal Services BV. So this is going to be number one. So AQ Coastal services. Okay, what all income it does? It operates three feeder vessels on domestic Rotterdam, Amsterdam. So it's a feeder service on domestic. What is this income then? What is this? Sahil, you're right. It's a non-qualifying income because it's domestic. So it is, how much is the amount? It is 12 million. So 12 million would be my non-qualifying income. Then, then that's it. I mean, that's no other income there. Then AQ container services BV. Container, it provides port side storage and group management. So there is container storage, it is port facilities. So what is this? What is this? Sahil is right, it is non-qualifying income because it's port facility, it is not container detention. So it is going to be, how much was the amount? 6 million. Because it is port facility. Okay. And we have seen here that port facility is not going to, see, port operations are separate from shipping. It will not qualify as ancillary. Okay. Container storage and management services to group shipping. What is this? Management services for personnel services. What it is? What is the classification? Management services to group shipping companies. His income is 2.5 million. What is this management services? Management or personal services is not non-qualifying. Style, it's going to be ancillary. So just need to kind of go into that table again, all of you. But management services is 2.5 is going to be ancillary. So we have taken the whole thing. Now let's do a total. So I see, so what I see is 53 million is my combined qualifying income, ancillary is 7.2 and non-qualifying is 18. Now what is step 2? What is that I have to see? I have to see if I have to kind of see the 50% cap, right? So what is the total qualifying income? It is 53. What is the ancillary 50% of that? 50% of qualifying income is going to be this into 0.5, which is going to be 26.5. And how much is my ancillary income? It's only 7.5. But total allowable ancillary income is, how much is going to be the total allowable ancillary income? Correct. It's going to be the whole because it's effectively lesser than 50% of my. So allowable ancillary income is going to be 7.2 million. Okay. Now what is next step? I did all this. Then step 3 is What is step 3? Then I calculate my globe income. Now I can calculate my globe income. No? So in this, what is the total income? Total income was 78.2 plus shipping income exclusion. How much is my shipping income exclusion? It's going to be my qualifying plus ancillary, both would be excluded. So my globe income is going to be 78.2 minus 60.2. So effectively my only my would be. So did we answer the question now? Based on the financial, determine excluded shipping income. We determined excluded shipping income, which is 60.2, and also globe income subject to ETR testing. Okay. So we calculated globe income. Now we will step 4 subject it to ETR testing. How do you test now? What is my globe income? It is 18 million pounds. Have they given anything about taxes paid? Yeah, the total adjusted cover taxes paid is 2.7 million. So adjusted cover taxes paid is 2.7 million. So what is my effective tax rate? Is going to be 2.7 divided by 18. So it is 15%. So what would be my top up? What would be my top up? What would be my top up tax? Absolutely. I don't need to pay top. So this is how the steps and workings for each would come. The main thing is categorizing the shipping income into qualifying, ancillary, and non-qualifying. Okay. Is this example clear? So we will kind of do that on the basis of the whole constituent entity. Okay. Because why we are taking the whole constituent entity? Because to capture this gap, we have to take the whole constituent entity. Okay. Now, if you ask me to split this 18, is it easy to split this 18? Because I already have it here, right? The 50% cap should be on a total basis. That's why we are doing it together. Now, if I want to split this 18, I can easily split now. So here there is no nothing. It is all going to here and here. Okay. Are you understanding what I'm saying? Like, technically it is. Okay, so that's how you have to calculate shipping exclusion. What documentation you have to make? Of course, if this comes in reality, where which it would, we have to do qualifying income classification, like how we did now. International traffic, voyage records showing that we are into cross-border routes. Ancillary cap calculation, strategic management, board minutes, because strategic or commercial management is an important thing to get this exclusion. Just because you're having shipping income, you'll not get this unless you can prove strategic management also. And then cost allocation, methodology of attributing cost to shipping versus not. So that is a very important thing, because here it is already given that it is income. Okay, we will only be given revenue and cost. We have to kind of split it as well, because it's only the net income which is discussed. Now, how to kind of do that cost allocation? So, if it is direct vessel cost, it's kind of like 100% allocated to shipping income only. Crew cost, then by vessel, by whatever vessel it is, you have to assign it. Shared overheads can be allocated on the basis of revenue. Okay. You can on the basis of revenue and not on the basis of time. Time allocation is not permitted. You can based on revenue. So if it is there is shared overheads, say let's say that there is both qualifying income, ancillary income, non-qualifying income, and there is a whole amount of overheads, then you can split it on the basis of how much is the revenue that's coming. Okay, and finance cost by the means of assets which is financed. Is this clear what a shipping income or like a little base on that? Any doubts? Yeah. Okay. Fantastic. So let's close for today, and tomorrow we will go to even technical and conceptual things. Okay, guys. Thank you.